Fears of Trump's trade war cause Asia-Pacific markets to slide. Tech giants are pouring unprecedented sums into artificial intelligence as the AI race heats up. And we'll explore the Paris International Agriculture Show amid growing farmer frustrations over economic pressures, policy changes and the future of sustainable farming. Hello, I'm Isabel Ewing with the latest business and finance news here on TRT World. The Asia-Pacific markets are facing turbulent times as global economic pressures mount. From shifting trade policies to central bank decisions, the region's finance is being reshaped. The effects are being felt across stocks and currencies. Investors are assessing a complex mix of challenges, from political uncertainty to looming tariffs, while anticipating the broader implications for growth and stability. Japan's Nikkei 225 led the decline in Asia, plunging over 1% as Trump's tariff threats rattled investor confidence. This sharp decline dragged regional sentiment lower, spotlighting the vulnerability of export-heavy economies to trade disruptions. The Kospi dipped 0.4%, reflecting unease after the Bank of Korea slashed rates to 2.75%. With the Korean won weakening against the dollar, economic slowdown fears are intensifying. Hong Kong's Hang Seng Index fell 0.6%, hit by US trade tensions and a faltering tech sector. Meanwhile, the CSI 300 in mainland China shed 0.4%, underscoring the region's stock market strain. Australia's S&P 200 declined 0.8%, caught in the crossfire of global risk-off sentiment. This drop highlights how tariff fears and Wall Street's overnight stumble are curbing economic optimism. For more on this, we're joined by Naeem Aslam from London. He is Chief Investment Officer for Zai Capital Markets. Naeem, welcome. Thanks for being with us. How, firstly, will Japan's 1% Nikkei drop affect regional trade?
Sure, thanks for having me. I think that the impact is obviously going to be magnificent in the Asian market. And as you correctly mentioned right at the top of your story, it is all about Trump tariff. Investors have digested the news to a larger extent that yes, okay, this is a bit of a negotiation tactic, but the threats of tariffs are still very much real on the table. Even as of yesterday, Donald Trump has made it very, very clear that he is very much determined to go ahead with the tariffs that he has spoken about. So I think now markets are saying on one hand that, okay, these are negotiation tactics, but on the other side, well, okay, maybe there is a bit more to that, and then that is very much impacting the overall confidence, not only in the Asian markets. We've seen the sell-off, the intense sell-off, I should say, over on Wall Street last night as well.
And Naeem, what about South Korea's 2.75% rate cut? Does that signal deeper economic trouble?
Well, clearly, because I think that is the only way when any central bank will really step in that aggressively. And I don't think that this particular rate cut is just a one-off rate cut and the job done kind of a thing. Because I think by looking at the current market situation, I think that the further rate cuts are going to be even more aggressive in order to support the local demand, in order to support the local consumer sentiment, business confidence among entrepreneurs. I think there's going to be a bit more than that, and we are not the job is not done. And then I think that is very much reflected in the market, because market players are expecting a bit more aggressive moves from the central bank, and the current reaction and the action by the central bank has been slightly underwhelming.
That is all we have time for. Naeem Aslam from London, Chief Investment Officer for Zai Capital Markets. Thank you.
Thank you for having me.
Tech giants and investors are funneling massive amounts of money into AI, banking on its ability to transform operations and drive profits. These substantial financial commitments highlight the strategic importance of AI. Apple is investing $500 billion over the next 4 years, aimed at expanding its AI capabilities and infrastructure. The news has sparked a stock rally as investors bet on AI powering next-gen devices. This move is expected to bolster the company's AI initiatives and contribute to the local economy through job creation and technological advancement. Microsoft recently announced an $80 billion investment in artificial intelligence for 2025. This investment aims to support the training of AI models and the deployment of AI and cloud-based applications worldwide. The decision promises thousands of jobs and a stronger foothold in the global AI race. China is not lagging behind. Tech giant Alibaba has committed to investing approximately $53 billion into AI infrastructure. This investment surpasses the company's total spending in the sector over the past decade. It just goes to demonstrate its ambition to be a leading global cloud provider. Let's cross now to Sydney and speak to Mark Humphrey-Jenner, an Associate Professor of Finance at UNSW Business School. Mark, hi and welcome. So Microsoft's $80 billion AI push, how much is this going to challenge its rivals?
Well, firstly, thanks for having me. And the $80 billion, it's been an interesting one because the market was very lukewarm on the $80 billion announcement. Indeed, the stock price actually went down a little bit. It appears the $80 billion is to invest in data centers, to improve AI training. Microsoft is also going all in on OpenAI. But the market does appear to be a little bit unconvinced that it will necessarily be enough to compete with some of the other players like Apple, and potentially is a little bit nonplussed by some of the ending of leases of other data centers. So there's certainly mixed information that the market's processing about it.
And looking to China, can Alibaba's $53 billion bet make it an AI frontrunner?
The $53 billion was actually a really interesting announcement because Alibaba at the moment is up over 50% year to date. But on the information coming out, its stock price actually went down some 10%, suggesting the market is perhaps not convinced that $53 billion is either going to be effective and beneficial to the bottom line, either being too large relative to what they expect Alibaba to achieve, or too small if they're seeing Apple invest $500 billion, or potentially a combination of the both. It's almost not big enough and not small enough for some or for different players in the market. But regardless, Alibaba is also competing with DeepSeek within China, suggesting the market is yet to be convinced, notwithstanding Alibaba already making some significant excursions into the AI space.
And Mark, when do you think these massive investments into AI will start translating into real profitability for companies? Is it too soon to see that, or are we seeing results?
We'll see some results almost relatively soon for some companies that either A, are using data centers and leasing those out to OpenAI or various other players, or alternatively, if they are actually generating subscription revenue. And there's another source of revenue that sometimes doesn't actually filter into the news as much, which is managing the political expectations. If we look at Apple's $500 billion of expenditure, and you look at the announcement coming from Apple, a lot of the rhetoric wasn't just about AI. It was about how many jobs they're creating, how much benefits they bring to the local economy, the type of investment they're doing in various locations, like in Apple's case in Houston, and a lot of terms about how big their manufacturing is going to be, to the 250,000 square foot facility. A lot of it seems to be catering to and pitched toward a political audience, potentially trying to say, well, we're investing in the US, don't hit us with tariffs. Or we're investing in the US, we're going along with what the administration wants. So in many ways, they're managing not just AI revenue, but the political environment they're operating in.
Certainly, and you mentioned Houston there, so I want to ask what finally about this $500 billion Texas factory for Apple? What is that going to mean for jobs?
Well, Apple has insisted that it will bring thousands of jobs, but it has been a little bit vague about exactly how many. Apple, in its announcement, did highlight they employ many thousands of jobs in the United States, so account for around 20,000 employees in the US, or 20,000 new employees in the US, rather, over the next 4 years. They've also highlighted that they're one of the biggest users of TSMC's factory in Arizona, which accounts for many thousands of jobs as well. But the factory in Houston, there's been a little bit unclear, a little bit opaque about exactly how many jobs it will create. However, they've certainly asserted it will manufacture, occupy 250,000 square feet, be a major advanced manufacturing facility. They've also talked about training, both in Michigan and in Texas. And they've also talked about their footprint across all 50 states in the United States. So there's some clear messaging coming out of Apple about that.
Mark Humphrey-Jenner, Associate Professor of Finance at UNSW Business School, joining us from Sydney. Thank you so much.
Thanks for having me. Great being with you.